Welcome back everyone. I hope you're doing well. And in this video, we're going to take a look at a high dividend stock that has a current yield right around 5% and the company's trading at a very low valuation. And at this current point in time, this company is estimated to be undervalued according to Simply Wall Street. And right now, when the market's trading at all-time highs and companies are exploding over the past few weeks, it's getting harder and harder to find some nice high yield to get that passive income every single quarter. So we're going to take a look at a high yielding company that currently pays out 5% and that dividend is growing at a very nice rate each and every year and is sustainable over the long term. And before we jump into this stock, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. And the stock that we're going to focus on in this video is AbbVie. Ticker ABBV. They currently trade for $105 per share, and on the 12-month chart, the share price has grown by 47%. This company has a current market cap of $191 billion, and they're trading with an extremely low forward PE of only 8.73. So right now, when the entire market is trading with a valuation and a forward PE right around 28, to get a company with a yield of 4.9% at such a low valuation may be a great value play to add to your portfolio. And at this $105 level, the company is still estimated to be 46% undervalued according to Simply Wall Street. And this platform has an estimated fair value per share at $199, which of course is well above the current share price that sits between 105 and 106. And how they came up with this number is through a discounted cash flow analysis where they forecasted out all of AbbVie's future cash flows over the long term, and then they discount them back to the current point in time. And when they do that, the estimated fair value per share comes in at $199. So definitely an interesting company on the market right now, trading with an extremely low forward PE and is estimated to be undervalued through the DCF calculation. And now we're going to move on to AbbVie's latest investor presentation to take a look at the company's current operations. So this big pharma giant currently sells products in 4 main categories, which include immunology, hematology, neuroscience, and allergen. And all of these markets have attractive growth potentials over the next 5 to 10 years. And within each, AbbVie has the #1 product from 5 different categories, which include the toxins, fillers, body contouring, plastics, and regenerative medicine. And right now we can see that their big products actually dominate over 50% of the market share in 4 of these categories. They own Botox, Natrel, Alloderm, and many more. And right now this big pharma leader is dominating their respective industries, which is extremely impressive. And if we take a look at this company's financial history, they have been crushing it on the market as well. They were spun off from Abbott Laboratories in 2013, and since then, their adjusted net revenue has been growing at over 13% each and every year, and their earnings per share have been climbing at close to 9% annually as well. And overall, in the past 7 years, their total shareholder return is at 342%, which of course includes the dividends and the share price appreciation. And of course, we're talking about AbbVie today because they offer such a high starting yield, right below 5%, and that dividend continues to grow at a massive rate. And since 2013, their total dividend payment is up 225% in a matter of 7 years. That is absolutely incredible. And if we take a look at their current dividend scorecard, the company's yield at their current share price of $105 is at 4.9%. They pay out $5.20 per share every single year, and that only makes up 41% of their net income. So that means the company still has a ton of net income left over to reinvest, pay down debt, and continue to grow that dividend for many years going forward. And right now, their 5-year annual dividend growth rate is at over 18%. So you're locking in an extremely high starting yield, plus the company has a very strong history of increasing that annual payment at a very fast rate each and every year as well. And of course, the company's dividend growth streak is currently at 7 consecutive years, which is how long they've been trading on the market as their own separate corporation. And AbbVie going forward is projected to have the capability to continue to grow this dividend for long into the future because they have a massive pipeline in the works. Right now they have so many different products from their 5 different categories, all in development and with mass expansion going forward between 2021 and 2025. And alone, 2 of their products that are near market potential are expected to generate over $15 billion of global sales in the 2025 fiscal year. So right now they still have 2 products that aren't even available on the market in the pipeline and in the works to continue to grow and will reach over $15 billion in a matter of 4 to 5 years. And now if we take a look at AbbVie's most recent shareholder letter, we can see that in 2020, they invested $5.8 billion in research and development to grow their pipeline, and throughout the pandemic-ridden year, they were still able to grow their total earnings per share by 18% over the 2019 number, which is absolutely incredible. And going forward in 2021, they're projecting another 17% growth in their annual earnings per share and the total revenue to climb to over $55 billion. And AbbVie's CFO has also announced that the company's committed to paying down their debt, improving the balance sheet, and is planning to reduce $15 to $18 billion of combined company debt by the end of 2021. And I think that's absolutely incredible. After their most recent acquisition, they do have a little bit too much debt on the balance sheet, but after they continue to pay it down over the next 2 to 3 years, I think their overall financial position will improve and they'll get to a very healthy level. And next, we're going to take a look at AbbVie's future expected growth and the company's financial statements. And we can see that over the past 4 quarters, they have beaten on analyst guidance each and every time, and going forward throughout 2021, analysts are forecasting high double-digit earnings growth each and every quarter, which is a very strong sign. And if we take a look at AbbVie's income statement, every single year, total revenue continues to grow, and it reached an all-time high in 2020 at $45.8 billion. And going forward for 2021, the company's forecasting this growth to $55+ billion over the next year. So that'd be an increase of over $10 billion to their total top line. And if we take a look at the company's cash flow statement, every single year, their total cash flow from operations continues to expand and once again has reached a high of over $17.5 billion in the trailing 12 months. And for a high dividend company, we want that cash flow to continue to grow because that's how dividends are paid out. They're paid out in the form of a cash every single year. So net income is allowed to fluctuate based on different expenses, but as long as the company's total cash flow, which we can see here, continues to grow year over year, we know that this company will sustainably pay out their dividend and has enough excess cash to continue to grow it each and every year. In 2020, AbbVie generated $16.79 billion of total free cash flow and only paid out $7.7 billion as a dividend, meaning they're spending less than 50% of their total free cash flow at this current point in time in the form of a dividend. So they have over $8 billion to reinvest back in the business, pay down debt, and also leaves them a lot of room to continue to grow that payment at a very nice rate over the longer term. And if we take a look at an analyst report for the company, over the next 12 months, they're forecasting another 15% growth in the company share price. And at this current level, they are considered a buy with 6 strong buys, 13 buys, and 5 holds, and no one is selling out of this company at this current point in time. And the total annual revenue is projected to grow by over 20% in 2021 and another 8 to 10% in 2022. And according to Yahoo Finance, they're forecasting only 4% annual share price appreciation over the next 5 years, which I do think is on the lower end. But if you add in their bearish expectation of 4% plus a 5% dividend, you're hitting 9 to 10% annual share price appreciation on the bearish side. And at this current level, analysts are all saying outperform for AbbVie. We can see all of them are maintaining this highest rank. And right now, the company is considered a buy with a 2, and the current share price of $105 is well below the 12-month expectation of $122 per share. And if we take a look at some other platforms, they're all forecasting some nice upside from AbbVie's current level. TipRanks has another 20% upside with the average expectation of $127, and CNN is forecasting a share price over the next 12 months at $124, representing 18% upside from the current level. So a lot of analysts are expecting AbbVie's share price to continue to climb even higher, plus that 5% current dividend makes this one of the most interesting high yield companies on the market right now. So we're going to wrap up the video. Thank you for watching to the end. Of course, we went over AbbVie as a whole, took a look at the company's current operations, their financials, and discussed the potential for this company to continue to grow over the long term. Right now, you can pick up some shares with a forward PE of only 8.73 and a dividend yield right around 5% for a company with a lot of growth potential and some huge drugs under development. So definitely let me know in the comments what you think of AbbVie. I do own some shares in my personal portfolio, and I collect that growing dividend every single quarter. And I may continue to buy more if the share price falls anywhere below $100. So thank you for watching. Please hit that like button and subscribe if you haven't already done so, and I will see you in tomorrow's video.